You're listening to AI Prism from Seoul Economic Daily.
It's Tuesday, June 9. I'd like to share some thoughts about global investors.
If you're managing a portfolio with Korea exposure right now, you're caught in a complex tug-of-war. We've got three interconnected forces driving risk today. There's a Middle East supply shock, a hawkish recalibration from central banks, and the crystallization of the U.S.-China AI infrastructure divide.
Yeah, let's start with that Middle East supply shock. The April ceasefire has completely collapsed, but the crucial catalyst for markets here is that Iran and Oman announced a toll on the Strait of Hormuz.
Which is a direct challenge to U.S. free navigation demands, right?
Exactly. We can really think of this as a geopolitical tax on global supply chains, but for our listeners, how does a toll thousands of miles away transmit directly to Korean asset models?
Well, it really comes down to energy dependency. I mean, the Strait of Hormuz handles about 20% of global oil. And South Korea, they source roughly 70% of their crude directly from the Middle East.
Oh, wow, 70%. That is significant exposure.
It is. So if this toll is enforced, it establishes a precedent for sovereign leverage over shipping. For your portfolio, that translates to immediate imported inflation. It squeezes earnings for Korean industrials, the chemical sectors, and crucially, it drives Korean won depreciation.
Right. To clarify that mechanism, because Korea has to pay more for energy imports, they are effectively selling won to buy U.S. dollars just to cover the higher oil bill.
Exactly. And that structural currency weakness puts Korea's central bank, the Bank of Korea, in a really difficult position. So the near-term variable you need to monitor is the actual toll implementation against commercial fleets and, of course, the U.S. Navy's response.
And that energy-driven inflation feeds right into our second pressure point, which is delayed rate cuts. We saw strong U.S. May payrolls, adding 172,000 jobs.
Yeah, which immediately pushed the Federal Reserve's rate cut timeline further out. And because of that, Citi is actually flagging a material tail risk for Korea. They see a non-trivial probability that the Bank of Korea's Monetary Policy Committee might hold a rare extraordinary meeting in June to hike rates.
Wait, an extraordinary meeting? That carries heavy signaling weight, especially considering the Monetary Policy Committee usually strictly adheres to its scheduled 8 times per year calendar.
Right. It's highly unusual, and it really highlights a paradox in the current market.
Yeah, I've been struggling to reconcile this. Korea's benchmark stock index, the KOSPI, is up 166%. If foreign capital is flowing into Korean equities like that, shouldn't the won be strengthening? Why is it still so weak?
It's a critical disconnect, and it comes down to how institutional capital manages foreign exchange risk. When foreign investors buy Korean equities right now, those positions are largely hedged.
Ah, so they buy the stocks but simultaneously take out insurance against the won depreciating?
Precisely. Because they're hedging, those substantial equity inflows don't translate into organic demand for the won. Meanwhile, duration trades are unwinding globally.
Right, so betting on long-term bonds is taking a hit.
Yeah, the U.S. TLT ETF saw $2.16 billion in outflows, and Korean equivalents are moving in lockstep. The ACE U.S. 30-year Treasury active ETF shed 52.9 billion won, which is about $38.3 million.
So we're seeing simultaneous pressure across sovereign debt markets. Looking ahead, that June 10 U.S. CPI release will be the definitive data point dictating the near-term paths for both the Fed and the Bank of Korea.
Absolutely. But, while we navigate these macro rate fluctuations, structural capital is locking into a much deeper long-term shift.
Right, the U.S.-China tech divide.
Yes. Let's look at the near-term technicals first. Marvell joins the S&P 500 on June 22. That inclusion triggers up to $35 billion, or about 50.75 trillion won, in passive buying.
Because index funds are legally obligated to track the S&P 500, so it functions as a mandatory shopping list, regardless of Marvell's underlying price.
Exactly. It's a front-runnable, highly predictable flow event. But the structural counterpart to this in China is what requires deeper focus.
You're referring to the brain-computer interface developments.
Yeah. China's National Medical Products Administration approved NEO, the world's first commercial brain-computer interface. And crucially, they integrated reimbursement for it directly into national health insurance via their 15th five-year plan.
That is a highly coordinated go-to-market strategy, and parallel to that, Huawei just concluded a 220,000-person ICT competition. It absorbed 37,000 STEM students specifically from the Global South.
Right, and notably with zero North American participation. Consider the strategic scale of that. It's an entire pipeline of global engineering talent funneled into a single state-backed ecosystem.
So China's talent pipeline and this state-backed insurance integration, it essentially acts as a sovereign insurance policy against U.S. tech sanctions. You secure domestic demand and lock up the Global South's talent pool.
That is the primary analytical takeaway for your 10-year tech sector allocations. Marvell is a front-runnable technical event. China's talent absorption and policy coordination are permanent structural inputs.
For the near term, portfolios definitely need to monitor Marvell's price action heading into June 22. But as a final thought to mull over, when a shipping toll in Oman and a talent pipeline in China can simultaneously squeeze Korean equities and rates, you have to ask yourself, are any regional assets truly isolated anymore?
It's a great question, and definitely something you need to price into your models.
That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan I4A award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.